Let's talk about supply and demand, how to look for supply and demand, why supply and demand are so important, and how it can help us understand institutional buying and selling. So when we look at any price chart, what we want to do is find out where the big players, the institutions, the hedge funds, the governments are building their positions. The big players, they cannot just open their trading platform and enter one trade with their full position, or otherwise the market would run away. So they have to slowly and steadily build their position. And luckily for us, we can often read those areas from our charts. And let me explain what good supply and demand areas are. So here you can see the price was in a decent uptrend, and what we want to find out is, and what we are looking for, are so-called reaction areas. We want to look for where did the market do something that is it really stands out. Where is an outlier move? And outlier moves are something where the market does something extreme, huge spikes, very, very fast turnarounds, or explosive moves away from a level. So let's try to see, and this is obviously here the origin of this move. And you can see what happens here is that the market was in a downtrend, and then the downtrend stopped at one point. And you can see here the market traded sideways for a little while, and then it rallied. So this is the origin of this rally move, and it's the origin also of a new uptrending phase. So at the origin, and so ask yourself, who is able to reverse such a downtrend? And it's only the big institutions, the one who really control the markets. So you can draw a zone around those lows where you have, first of all, the origin of a new trend, and also you want to see a little bit of a consolidation to validate that there's really something going on. And then you can see here, the next time the market dips into this area, it picks up new buying pressure or new buying interest, and then it continues its way higher. Then let's just follow the market on its way up, and we want to look for consolidations like here, where the market then suddenly makes an explosive move. And you can see here, those two candles, when we look at the previous trend, they are very, very big compared to what has happened in the past. There was only one candle that is as big, and maybe in here. So clearly there's something going on in here, a little consolidation and an explosive move. This is how you find supply and demand, in this case a demand zone. You can see the market started a new rally, and then here the market drifted back into this area. It dipped almost twice into this area, and then it made another rally. So here you can see this is another validated demand area, and it will not work all the time, obviously, but when the market dips back into such an area, you can go to a lower time frame, for example, and just wait for a price action confirmation. That's what we do in our masterclass. The supply and demand, they are just tools how we can identify high impact areas, and then we lay our strategies and our signals on top of them. And then you can see, okay, where was the next one? This is usually not what you are looking for in a new demand zone. This is too volatile, and also there hasn't been a consolidation previously. So the market more or less just made a V bottom. You can see the market just tanked and then reversed. So yeah, you might say, okay, there is something here that we need to be aware of. So you might be able to go use that going forward, but it's harder to pinpoint the exact location of where the institutional buying and selling was. So let's look forward, and you can see here was probably another one, but we are lacking the explosive move. You can see that we have a little bit of a consolidation, but no explosive move. The next time we see something like an explosive move is here. You can see the market was in a little downtrending phase, then it consolidated here for a little while, and then an explosive move. Those candles, they really stand out on your chart, and therefore it is usually quite obvious and easy to spot those supply and demand areas. You just need to find explosive moves away from a little consolidation area or from a turnaround. So, and then we can draw that going forward. Not always will the market immediately dip back, but we'll see what happened in the future. Let me check. And you can see that here the market briefly dipped back into this area and made another rally. So on this time frame, it doesn't look like a very big move away, but on the lower time frame, if you use those areas to pinpoint and to time your entries, this will look much bigger and more worthwhile on the lower time frames. And by the way, we can also extend that forward. You can see, if I zoom out a bit, this was the origin of this spike, this V bottom, and the next time, even we can expand this one. You can see the next time the market did spend some time ranging around this area, and then this actually formed the bottom of this new uptrending phase. So you can see how interesting this becomes if you are looking for supply and demand areas, and how they can really foreshadow and help you pinpoint areas. Let's take a look at a few more maybe. So here you can see we have another little consolidation, not a super explosive move, but still the market did break out quite strongly. So you can see the market almost dipped back in with this wick. This is very common to see. And if we extend this going forward, you can see the market almost touched it again, just like it did here. So there seems to be some type of demand even in this wick here. And you can see then again the market dipped back into it. Actually it did form another consolidation here and then a breakout to the upside. So a very interesting approach, I think, to pinpoint price areas and to pinpoint support and resistance, or to just pinpoint entries where you are looking then for trading entries. And you can see even the next time the market did use this as another boost to start a new uptrend. You can see here then the next time, the third time, the market did spend a little bit of time of ranging around it, but by this time this supply level or the demand level has already been weakened significantly. So you really want to focus on the first and maybe the second time the market comes back to such a level. So let's observe another trending phase, and you can see here when we start here on the left hand side, the market was clearly in a downtrend, and what I then like to do is then I wait for a turning point, because those turning points here, they are, you can ask yourself again, they are very important areas, because who has the money and the power to really reverse such a downtrend into a completely new uptrend? And obviously only the big players can do that. And then we can draw a few. You can see during this uptrending phase, we can draw new supply or demand areas in this case. So what we are going to do, let me zoom in first. We look for pullbacks and we look for little consolidations where then the market exploded. You can see here, yeah, we do have a consolidation, but we didn't have an explosive move. Here as well, we did have a consolidation, but not an explosive move. Here we did have something, you can see, the market has a small consolidation, and then here the market started a new rally. Also in here, there seems to be some type of demand with an explosive move. So you can see there are two demand areas just on top of each other. Here again, a small consolidation, but no explosive move. And then here again, you can see a consolidation, not an explosive move, but also a strong move to the upside. And let's see what actually those areas show us on our charts. So you can see, let me zoom out again. Let me first extend them going forward. Let's see that here, here, and here. And you can even see that even this area here, even if this isn't a textbook perfect demand area, you can see how many times the market did respect it going forward. However, I want to look at the ones below that, the three ones below that. You can see here, the market did come into this, had a new, and then made a new uptrending phase. So on the lower time frames, this is definitely something that you can use. Here in this case, the market was in a strong downtrend, and then once it hit the demand area, it made another move to the upside. Granted, it did move lower afterwards, but if you are on the lower time frames, you're not looking for a completely new reversal. You're just looking to make your patterns and a few points here and there. Here as well, the market did move into this, which was the origin, obviously, of this huge move. And the market, again, found support and did rally here a little bit. So, again, if you are using this on the lower time frames to time your trades, being able to pinpoint supply and demand areas can be a very important tool in your toolbox. Let's take a look at a famous US dollar yen, and there are so many demand areas in here. So let's start here. Obviously, if you see something like this wick, you really need to pay attention, because ask yourself, who is really able to reverse such a move? Only a lot of buying interest, big positions can do that. So clearly this is something we need to observe later, but we can see it even further. What we are going to do is that we are looking at this trend here to the downside, and then we look for, okay, where in this trend are consolidations that led to a sudden breakout and a new move to the downside. So here is something. Here this is not really that nice, because the consolidation is very long, and also there is not a very extreme breakout point. So I would say we can stick to only this one here. We want to stick to really the most important supply zones. So you can see when we extend this going forward, zoom out a bit, you can see that this is a very important level, and this is very nicely confirmed. You can see every time here the market comes close to the area and then sells off, and here again the market comes or dips actually into the area and then it completely sells off. So clearly there is a lot of selling interest in this area and even going forward. But let's see what happened here going forward with this. You can see here the market overshot this level very precisely. It was in a strong downtrend, made its move here into the area and then reversed on the spot. So a very nice example, and it shows that if you have a big reaction in the past, very often you can expect to have something like this as well. And also a recent supply and demand area, you can see here was a huge move to the downside, a very big move. And before that you have a consolidation. So in this area there was probably a lot of buying and selling going on. You can safely assume that the big players, they were building their positions, and then suddenly it spiked to the downside, when on the other side there was no one. The big players, they were selling and selling and selling until nobody was willing to sell to them anymore. So here you can see we extended it going forward, and every time, well, only 2 times for now, but the 2 times the market went back into the lows here of this consolidation area, where this is how you usually draw supply areas. The market picks up new selling interest, sells off, picks up new selling interest and sells off. So very interesting how we can use this, and there are many different shapes and forms of supply and demand areas, but if you know the basics within this video, then you can already find a lot on your charts.